In this video, we're going to be talking about an altcoin, and this week it's going to be SEI, a super fast new layer 1 that is doing really well earlier this year, and it may be an interesting one to have in your portfolio. At least I do have it in mind. Today we're going to be talking everything about SEI and why you should be consisting it or having it into your portfolio. Onto your journey into this bull and bear market, making sure that you get the best return possible. Let's get started. In this video, we are going to be exploring SEI, which is a layer 1 blockchain that works on ETH and Solana. It's actually connecting them. But before we continue, this video is not sponsored, but I do have it in my personal portfolio, as in the previous videos we have been explaining that. Now, SEI is an interesting one, but before we continue, I want to debunk the title because I do not believe that it's an actual Solana killer, but it can actually exist next to Solana and next to Ethereum, and it might be able to help each other out. Now, what is SEI and what does the website say? Well, the website says the following, which is pushing the boundaries of blockchain technology through open source development. SEI stands to unlock a brand new design space for consumer-facing applications. Now, the primary question before we continue is, do we actually need so many layer 1s? That topic is happening a lot on social media. It's also on layer 2s. It's also on DEXs. I think there are just many projects out there trying to solve an issue that we might or might not have. And when it comes to layer 1s, if you look at the list that CoinRanking has, we've got a close to 150 layer 1s at this point, and some of them do not work or are dead already. Some do have a layer 1, but the token itself doesn't really work, and I'll get to that in a little bit. But I think that there is an actual segment for many layer 1s out there, and the reason why is that some are complete nonsense, some do work, and some are actually specifically arranged or designed for one use case or one vertical. So for instance, ETH is super secure, is compliant, is DeFi based, while Solana has high throughput and is designed for dApps and other use cases, where things like AVAX and NEAR are more focused on RWA, where Hedera has a different use case, and Peak is focused on DePIN. So I think that we can have multiple blockchains working next to each other, being interoperable with each other, and being able to make that modular blockchain world that we all want to have. So yes, I think there is a use case. I do not believe that there is space for so many. The question is, what is SEI? SEI has been launched, went live, in August 2023, and it is designed by two people named Jeffrey Feng, and Yahendra Yok, if I say it correctly. They started building the blockchain in 2021, and they have raised more than 100 million in grants and VC backing during that period, which is by far enough money to build an actual blockchain and technology. And they have been doing a seed round back in the day, which was done at a valuation of 50 million. Doing the seed round at 50 million makes all those seed round investors a very happy camper, as the current valuation is, FTV, is at 4.3 billion. So they are up 80x at this point. Most of the tokens are still locked. SEI, as a matter of fact, has been built on top of through the Cosmos SDK. And we've been getting that, or are going to see that more often in the videos that we create. But the Cosmos SDK is the best infrastructure toolkit that the markets are actually providing, which is just giving you everything you need to build a blockchain on top of it. The weird aspect is that the SDK is great, but the token Atom is just worse, doesn't do anything, and that's why that keeps falling down. But out of the SDK, many great projects are starting to fire up. Now, the core focus of SEI is high throughput, low latency, high transactions per second, where it currently is a parallel EVM combining Solana with ETH. And those are a lot of words altogether. Well, EVM means Ethereum Virtual Machine. So the current way of how that works is, let's say I transfer something to you and I transfer something to your neighbor. The first transaction needs to be approved before the second one can come in. And that's what the picture is showing, where everything is lined up next to each other. However, if you want to scale, it's not possible to do it that way because there is a long latency or finality needed to approve all those transactions. That's why we are currently building different solutions, and the markets are still up to question which one is going to be used. And parallel EVM is technically something that we are able to use to scale up the blockchains, which means that if I transfer something to you and I transfer something to the neighbor, and those two transactions are not interfering each other, they can be approved next to each other, which means that all those transactions can be approved at the same time, through which you can scale up the amount of transactions that you can have within one blockchain. And that is what SEI tries to do. It's a very interesting concept. And primarily this is being used when we want to trade on DEXs. If, for instance, you want to trade a Uniswap and I do the exact same trade as you do, then depending on the time that it gets to the blockchain, I might be first and you might be behind, getting a worse price. But through this, you might be getting the exact same price and are able to have more transaction and volumes into your blockchain. By the way, this is completely different than rolling up all the transactions. So at this point, every single transaction still needs to be approved. Roll-up system like Optimism and Arbitrum is bundling all the transactions together and getting it towards the blockchain at a later point. Now that we know the focus on SEI, what is the actual use case and why is SEI important? The important question is, why should you use SEI? And to be honest, we don't know, but it is an actual potential solution for a problem which we have, which is scaling up the blockchain ecosystem and the blockchain space. So it might be used in the future, all depending on how fast SEI is going to be built. But in order to question that, we need to know, why should the token be important for the ecosystem? What is the actual use case? And what are some key metrics at this point where we can define whether SEI is doing well or not? Well, the token itself has some important things that is being used currently within the ecosystem, which is 6 important factors. It's being used for network fees. So SEI is being used to pay for transaction fees on the SEI blockchain, relatively normal. It is there for validator staking. So if you stake SEI, you're also able to vote on everything that's being done. And it's also being staked for securing the actual blockchain. And it's being done where you can vote on all the things that happen within SEI. And that's the third part, which is governance. The fourth one is native collateral, which is technically SEI can be used as native asset liquidity or collateral for applications built on top of SEI or when you trade on DEXs. The fifth thing is fee for markets, which is meaning that if you want to transfer SEI towards someone else or another coin that's on the SEI blockchain, you can pay more to the validators to improve the transaction speed or put you in front of the waiting list if that is needed at some point. We also know that there are many transactions being able to be done every second and every minute. And the sixth thing is trading fees. As I said, if you use the DEXs on top of SEI, you will be paying your trading fees in the SEI token, which at some point I think can be done in a token that you'll be trading, because then it becomes even more easier to use DEXs. But that is what we see, or what the token is being used for. The question is, why would you want to use the token and for what? And I've been touching this point earlier already, but there are a few important use cases, which is DEXs, marketplaces, and perhaps even things like DeepIn, where you need high throughput and a lot of transactions to be done in a very short time frame. That's generally how DeepIn works. And also when we are gaming, which lately we've seen off the grid, but if gaming becomes bigger with crypto, then you also going to be having a lot of in-game transactions, which we call GameFi. So that is technically what type of use cases we have, especially when it comes to DEXs and the amount of transactions that are in there. It's going to be magnificent to actually being able to have a lot of transactions being done in a short window. Now, if we look at the ecosystem, then the ecosystem is consisting of around 40 projects, of which probably you don't know any. Of course, we all know SushiSwap, and maybe you do know some of the projects in there, but most of them are not really getting traction yet. So that says that SEI in itself is currently still building up. So that means that either you could say it's overvalued or it's extremely undervalued because the dApps that are being built on top of SEI are so good. But essentially, it's starting to build up the ecosystem, which I think is going to be better in the coming period. Now, the question is, how fast is the actual token and is it as good as they say it is? And I've got a chart here next to me, which is from ChainSpect, in which it says that SEI is the number 7 in real-time transaction per second, TPS. On 6 is Base, on 5 is Near. Number 1 and 2 are Solana and Tron. And behind SEI, we can see that BNB Chain and Aptos are doing well too. However, the important factors here are not the real-time transactions per second at this point, but it is the max and also block time and finality. And if we look at the right side of this table, we can see that the block time, the time that is being used to get a new block going, is 0.4 seconds, which is faster than almost every blockchain in the top 10, excluding Aptos. So even Solana is lagging behind more than SEI is. And if we look at other blockchains, then some are having 6 seconds or 2 or 3 seconds. And the finality, that's the important part, that is 0.3 seconds. And finality means when the transaction is getting approved. So if you send something to an exchange, you can see that it needs some time to approve the transaction before you can actually withdraw it again. For Bitcoin, it takes 1 hour. For Ethereum, it takes 16 minutes. For Base, it takes 16 minutes. For Tron, it takes a minute. For Solana, it takes 12 seconds. And for SEI, it takes 0.3 seconds. So yes, it is as good as it is, but they still need to build the ecosystem to test whether they can actually have as many transactions as they say they can. And in order to see that, the ecosystem is currently building substantially, as the latest update from SEI is saying that they have achieved the highest percentage of daily active wallet growth in the layer 1 space. And on top of that, they have been integrating MoonPay. They have been integrating Elixir, which we also saw in the ecosystem, which is technically a stable coin that is integrated into the DEXs that are on top of SEI, which is DragonSwap and Jellyverse. And they have also integrated GBridge, which is a bridge towards SEI and back and forth with more than 20 assets. So yes, it is growing significantly, but at this stage it's still minimal compared to the other layer 1s that are out there, and there is still a lot to gain. Now, the next part is going to be about the tokenomics. The next question is, and that's the most important part, is how much of an inflation is going to be taking place with the unlocks of the tokens. And on the other hand, we need to know how much of growth the ecosystem actually has. And that's what we're discussing in this part, in which the first thing is looking at the amount of unlocks that we are having on a monthly basis. And if we look at Chainbroker, we can first of all see that the funding round has been taking place with several VCs. The seed round has been raising 5 million at a valuation of 50 million. So congratulations for everyone in that round. Now, what we see here is that if we look at the 9th of August, the amount of circulating supply was 2.6 billion. And currently we are already at 3.1 billion. So September, October, within 2 months, the growth of the token in itself in circulating supply has exceeded by close to 20%, or maybe even 20%. So that's a lot. That means that there is like 8 to 9% growth on a monthly basis at this point, and that continues until 2027, where it starts to decrease. So in order to balance out the value of the token, we need to have a bigger expansion on transactions, wallets, token usage to balance this out, where the price of the actual token is going to be fine. So on one hand, VCs are very likely going to take profits. On the other hand, people want to buy in to actually use the token within the ecosystem. So that's when we start to look at Dune Analytics, where we can see the average daily transactions, the total wallets, and more. Now, it's not as important to see all those wicks here with a very short window of heavy usage, but the average is important. And in that sense, I just mentioned that the amount of addresses has been seeing the most significant growth in the whole layer 1 ecosystem. What we see here is that since August, the TVL has doubled. So that is better than the 20%. It went up from 85 million to 173 million. The amount of active contracts has been going up from the 30-day moving average of 186 to more than 400 at this point. So that has doubled as well. The transaction count has basically gone sideways. Slow growth, as since the period of August, we've seen 125K, and currently it's at 145,000, so it starts to grind up. And the active addresses has been going up from 9,000 to 44,000 at this point. So that is a massive growth at this point in the ecosystem that is exceeding the amount of inflation of 8 to 9% on a monthly basis. So if this keeps on going, and if this keeps to have track where TVL grows, where the amount of active contracts and wallets is extremely growing or increasing over time, then this might be a very interesting one to have in your portfolio. The important question is, where do we see SEI going and what can we do in terms of prediction? SEI is currently on the edge of the top 20 if you look at the total FDV, which is currently valued at 4.3 billion. Circulating supply is 1.7 billion. And my expectation is that the top 20 is going to be between 50 to 100 billion at the end of this cycle or the peak of this cycle. So in that sense, there's a lot of upside to be gained. And if we look at CoinMarketCap, we can see that around 40% of the token is currently unlocked. And we know that on a monthly basis, we have an increase of 8 to 9%. So I think in that sense, there is a vertical expansion in terms of interest in the coin, but there's also a vertical expansion in terms of growth of the circulating supply. In that aspect as well, we can see that it listed in August 2023. It has created a bottom at 10 cents, and then it ran to $1.10, which is more than a 10x since its launch, which is super positive and shows how fast something can grow because it just took 2 to 3 months to get there. Now, currently, the price has fallen by more than 80% down, probably due to bad market circumstances, VCs taking money, and all those things. And we are not even into a bull cycle. So we do not know how far and how high we're going to go with the markets in the coming 2 years. But if we have an estimate of anything between 50 to 100 billion, knowing that the ecosystem is currently growing as big as it is, and that it's exceeding the inflation of the token, it seems likely that anything between $5 to $15 is going to be the peak for SEI, which at current valuations is between 10 to 40x as a potential sort of number that we're going to get to. Now, if we look at the technical analysis, then it's just consolidating in a very narrow range. And what we want to see is that it breaks back above 50 cents, because then it's going to take all the liquidity above the recent highs. And if it does that, it's going to exceed its run just like SEI did and have a new all-time high. Well, we can also see that it has had a very significant correction towards a higher time frame support, in which it tested it as support and it stayed there. But people are buying back into the markets because maybe SEI is currently heavily undervalued compared to benchmarking to other layer ones. You need to know that Polkadot, Cosmos, all those ones are still at a higher valuation than SEI, while SEI is getting way more momentum than those have. So in that sense, I think that given the current market circumstances, it is the right way to just buy the dips on a coin like this and just be positioned at this point. If you want to get positioned, this is the time, not when it starts to go vertical. Then you need to wait it out to have a significant correction as the one we've just seen with SEI. So yes, it's one of the few that I really like to have in my portfolio, and I'm currently holding this actual asset. Thank you very much for watching to this altcoin video. Next is the weekly insights on Sunday. As I said, 2 videos in a week. We are back on the grind. If you do enjoy the content, subscribe beneath. Also let me know if you can improve some stuff in the comments beneath, and I'll see you again on Sunday. Ciao.